All right, so really quick, just to show you guys what I'm thinking on BTC. There's also a good, there's some educational quality to this discussion because I can show you something that I notice about charts. So this formation here, it's both, this chart's both bullish and bearish. Let me explain what I mean. So longer term, big picture, midterm, not necessarily long term, but this really is, it's a bearish formation because it's a bear flag. But at this point, right, you can see that it's consolidating into an apex, which is an ascending triangle. That could cause a substantial breakout up or down. But what I'm thinking is the reason why, even though it's an overall bearish chart, we could still make a move up because we can break out of this formation, move up, correct a little bit, move up a little bit more, and then continue our correction down. And we still have a valid bear flag. It's just extended a little bit from where it is here. So just imagine if we drew this out, right? So assuming this trend were to continue, there's no reason why we wouldn't be able to push up, correct a little bit, push up again, until we eventually come back down, right? So we could certainly make a short-term trade here. And if we were to do that, if it were to do exactly what I just showed you, in theory, we could make a 7-8% trade. It could go up even more. So I think short-term, there is potential to make money here. It could actually go up as much as 10% if we get a strong enough breakout. It depends how we do consolidating into that apex and how much pressure builds up before that buy pressure releases, and it gives us a strong push up. Now, what you can tell on charts by looking at it, when I talk about how there's been a lot of competition between the bulls and the bears and they're fighting it out, we don't have control, so we're sort of spectators. You could actually see that manifest in the chart. So when you see an ascending triangle, the reason why that's a bullish pattern is because you consolidate in the apex. And if you know what's happening behind the scenes, when you have a constant high and you have higher lows and you have a stable trend line building those higher lows, imagine what's happening on the order books. Now, I've talked before about the interoperability of using the term of a sell or a buy wall and using support or resistance on a chart. A buy wall is going to be a resistance, a buy wall would be a support and the sell wall would be a resistance. So if you are buying a ton of Bitcoin and you're buying into that sell wall, the price isn't going to go up no matter how much you buy because that big sell wall is stopping you from going up. So then the price comes back down. Some other rich guy tries to buy a ton of Bitcoin to pump the price, but it hits that sell wall again, where there's some really big position that's selling, 3,000 Bitcoin right at $10,000. So you can't break above that 10K because of the large order there. That is exactly what a sell wall is. And the same thing for a buy wall. If you're trying to sell a ton of Bitcoin and the price isn't going any lower, that's because there's one really big buy order that's propping up the price. You can see that on a chart. When you have a support, you're looking at a wall, and when you have a resistance that you can't break above, you're looking at a sell wall. Same thing when you see an ascending triangle build, or any bullish formation that's upward, that has a positive linear regression. So you have a strong move up, and this also forms A, B, C, D, E's and stuff, which you might even be able to draw 1, 2, 3, 1, 2, 3, 1, 2, 3. Yeah, you could actually make that into an A, B, C, D, E. But in any case, by bouncing back and forth and forming this ascending triangle, we're seeing exactly that. We're seeing a lot of buy pressure on the bottom. It's increasing, right? So the base price, it dips down, but then there's another short-term support, which means there's a building up of more buying power as we move up. So right here, this was a support, meaning there was a strong enough wall there that it wasn't poking through, and then the price went up from there. And now the next move down was a little bit higher. It didn't go down quite as far, which means we are stacking up orders on the buy side. So we're building up more pressure on the buy side. That's forcing the price up at a constant rate, forming an ascending triangle, or the trend support, the base trend line support that forms the ascending triangle. If you didn't have a consistent solid resistance at the top, this would actually be a rising wedge, which is a very bearish indicator. Falling wedges are one of my favorite breakout indicators, and rising wedges can very accurately predict steep drops. So in this instance, the only difference between having an ascending triangle and a rising wedge, which would be bearish, the ascending triangle is bullish. The only difference there is the resistance right here. The resistance that's holding at 10.47 is what's making this into a bullish configuration. So that's why I said before it could go either way. You could break up, you could break down. I added another order here. I bought some Bitcoin right at this support, which is kind of right in the middle where the EMA support was. but I have a much bigger order down here. If this moves up from here, I'll still do well because I was already in it, but I really, really wish this order filled. I placed it right after that one wick that came down, and I figured it would dip down again. If it pushes up through the top here, I'll be pissed. On the other hand, if it does come right back down and it bounces off the trend line support, that would be a perfect entry because it would be entering right where that trend line meets my entry here. So we'll see if my order fills. Hopefully it does, and if not, if we break out now, I can have a really good short-term trade. But I hope this has at least enlightened you as to how you can tie what you're seeing on the chart to what you know about the order books and vice versa. It's really helpful to look at it that way because you can look at a chart and that'll tell you certain fundamentals. A lot of people think a chart is TA, fundamentals, looking at the order books and stuff about the business, right? Although order books are half TA too, so it's sort of in the middle. But you can see what's happening with overall buyer sentiment and the fundamental side of things by just looking at the chart, as long as you know what the corresponding term is on the other side. Support and resistance, buy wall, sell wall. You know that matches up, so when you see it on one, you'll know what appears on the other. Anyway, that's it. If you guys have any questions about it, hit me up.